GM. GM. So, trade of the day. This is the target for me. Well, that's sort of a second target. First target would be 42, which you got some highs up here. And that's target one. And that one probably, T1 should hold until Friday. T2, aggressive squeeze. And so I think that's probably what we're looking at here. What you want to see as well is how does price react in this reaccumulation phase. There's really just two paths that I see. There's path one, where it stays in this range here, and I'll go to the 1 hour chart and we'll draw a path. So the first target would be that Bitcoin reaccumulates in this area here and then pushes higher, right, and squeezes up, maybe goes above it and then back below it before Friday, and that's to consolidate below 42 until the OPEX, and then goes for the highs after. That's one possible outcome. Second outcome would be that we reject, so it'll break out here, maybe it rejects off the pivot or just rejects in this area here, and we push back down and price goes for one more sweep, at which point we just see the same squeeze up. They're the two paths I'm looking at. So one in black, one in blue. That's how I'm going to be trading it. So the way I'll trade it, I'll trade path one, the black path, and I'll set myself out a position. So my plan is to fill as low down here as possible. It's just like any, it's no different to any trade you would take. You're not looking to buy up here, because on the low time frames, if we just hide everything here, if you go to lower time frames, it looks great, right? Looks like it's going to break out. Looks excellent. Squeezing up. And it might just blast off. If so, that's why I bought spot yesterday, right? But as a trade, I would expect a false breakout, flush back down. Support is here. That doesn't look like super strong support. So what you do is wait for price to come back down and see how it reacts. Okay, if it comes down into here and holds and pushes back up, the next breakout's the one to buy. If it comes back down and sweeps below 39.5 and back inside, buy there. So you can either wait for the false breakout for it to come back down and start to get long here, or if there's a nice sweep and it comes down and below, get long there. So that's the path one, that's the black path. If it's the blue path, it'll be the exact same thing, right? If it comes down and it gives a sweep and comes back inside, I'll still buy it. But if it gets stopped out, that's fine. Second trade planned for a reclaim after a sweep below. And there's a thing, I think it's a Paul Tudor Jones quote, where he talked about how I aim for 5 to 1, right? Paul Tudor Jones, legendary investor and trader. He said, I aim for 5 to 1, meaning when I'm right, I make 5 times as much as when I'm wrong. But that gives me the leeway to be wrong a few times. He'll take a couple stabs at whatever idea it is. And that's one of the best ways to approach trading if you have multiple paths in mind, which you always should, right? Because you can't just say, this is going up because I want it to go up. Like, no, well, it could go up. It could hold in this tight range between the red lines. It could fake you out and stop you out the first time and go lower. But if you have positive risk reward on both of those trades, for example, if it came back down, give the sweep, you got an entry here, you can get quite a tight entry, and you can get a 5R up to 42, right? But if that one's wrong, and it comes back down, quite often that can offer you a better risk reward if it sweeps below there and into here. You can set your stop, you can trade it up, and you can get another. You can probably get it tighter, but you get the idea. And if you have a 4 or 5 to 1, and you're wrong the first time, but your second one is a 4 or 5 to 1, you're going to still net come out ahead. If both fail, okay. You take 2 L's, that's it. 2 are lost. Move on to the next one. Don't keep, don't keep doubling down and doubling down, because that's when you just throw money away. If there's like a third path here that I'm not aware of, and it does something totally different, okay. I won't trade that. Just like you don't trade all 10,000 coins every day. You only trade things that move the way you expect them to move based upon the information that you have. So that's my approach. Absolutely looking for longs here. I'll be watching the positioning and flows as well, so the open interest and the funding rates and the CVD, to see, just to get an estimation of, are shorts offside here? Because if shorts are really offside, I don't see us breaking this red box, these red lines. Right? The only way it will go back down to the lows is if there's too much of a build-up of longs in here, and price has to go down and grab liquidity one more time. And of course, if it's all wrong and we go lower, fine. That's always a possibility. However, I think yesterday's turnaround did come. It's what I talked about. Expect a green Tuesday. It didn't actually. It wasn't green even towards the daily to the New York close, but into the daily close we got a nice strong finish, and that's a decent reversal. And every time the market goes lower, people expect it to keep going lower, but now we're really seeing a clear out of all that liquidity. As long as it stays above 39, right? 39 on a wick down, I wouldn't expect. You never know. I mean, price can do anything. With this reversal, with this candle, I don't expect that blue path. It's still my second path. I don't expect the blue path because we had such a strong daily reversal that it seems like a bottom is in for now, and that we're going to go up first. Reason being is you can't get out of the way of the, it's like trying to turn the Titanic, analogy I give. If shorts are offside and they've been piling into shorts for a week and a half, it's real easy to target them up into one of these areas. It doesn't have to go to new highs, but it definitely can push up that far. So long only, couple ideas there, GM.